Hi everyone, my name is Pavan Zanda. Welcome to our YouTube channel brought to you by 3rd TimesACharm. We're here to educate both young and old people on financial literacy, financial independence, the stock market, cryptocurrency, and creating passive income. We are joined today by James Holloway, Robert Miles, Virpal Chadha, and Devin Gaines, who believe that there is a growing need and demand for understanding finances and how to create wealth for yourself as more and more people become retail investors.
The opinions expressed in the video are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education about the financial industry. The views reflected in the commentary are subject to change at any time without notice.
Thanks everyone for being here. I guess I wanted to start the talk off with asking you guys, what are your top 3 stocks and why?
I could take this up. I could start this off. So my top 3 stocks would be Carnival, CCL, Danaher, DHR, and Waste Management, WM. My reason for those is I've currently shifted my views on the market from bullish to bearish, which entails from bullish is I'm more aggressive in the market. I just want to keep buying. Everything's going to keep going up. And bearish is where I'm more conservative, where I feel the market's going to either take a hit or things are just going to stay stable. So for Danaher, I believe that this stock has long-term growth potential, and over time in the next 10 years, it's either going to double or triple. The reason for this is because they invest in water, and water is a limited resource. And with our shortage and the drought hitting California, and with the changes in our weather patterns, I feel that water is going to be a very what's the term? It's a commodity that people are put a lot of value to, and with that, they also pay dividends on all your investments. So I feel this stock is a good investment. Waste Management is very similar. They invest in landfills and taking care of all of our trash, which is also a big issue in the US today with our landfills filling up and with our limited resources in space on this planet. With the dividends that they pay and with this issue in our environment, that stock has only potential to go up, which it has for the past 5 to 10 years. And Carnival, that's more of a riskier investment. It's one of the few industries that haven't recovered since COVID. In March, when all the stocks took a hit, everything went down 50, 60, 70%. And Carnival, Norwegian, all these cruise lines still haven't been able to go out, and they've pushed their first passenger cruise out to May of this year from March. And with COVID and the restrictions, I feel this could even take longer. So an investment now when the stock price is a little lower, with the low volatility, this stock has good potential.
Thanks, Virpal. Does anyone else have any thoughts?
Yeah, I can follow that. My top 3 stocks, I would agree. One of them is Carnival, as Virpal mentioned. The other is Apple, and the last would be between Uber and Lyft. As Virpal already alluded to, Carnival had a low stock price, which was of May 2nd, 2020, of $7.80. Before that, in February of 2020, they had a high stock price of $36, and today they're trading at about $26. So again, as Virpal mentioned, once this pandemic is over, it's likely that the Carnival stock and as well as Norwegian and other cruise lines will rebound and have great potential for gain for many of the investors investing in that stock. So I'm very bullish on that stock. As for my reasons as why Apple is one of my other top stocks is due to this stock having a 4-to-1 split in August of 2020. Apple has split its stock a few different times, and with this 4-to-1 split, the stock price dropped down about to $100, making it a more affordable. And as we know, Apple is a $1 trillion company and will likely just continue to succeed in the market, and specifically with its iPhone. So I only see this stock rebounding and going back up, and then eventually doing another split as well, which could be very beneficial for investors. So I am bullish on this stock as well. And then as for my reasons to invest in Uber or Lyft, both stocks that I have invested in is kind of similar to as it relates to the Carnival. Losing its value during the pandemic, Uber and Lyft as well. Specifically with Lyft, in March of 2020, they had a low of $14. Before that, in February, their stock was around about $50 to $60. Today, it's trading at $57, so it's already kind of started to rebound. And it will likely just increase as well once this pandemic is over and people are able to take more Lyft and Uber rides going forward. So those are my top 3 stocks and why I'm investing in them.
Thanks, Kevin. If anyone has any other thoughts, let me know. Otherwise, we can move on to the next question. So taking a look at your own stocks, what are your bottom performing stocks and what do you think your next move is with them?
I think I could take this question. Hey guys, this is Robert. So for me, I would like to call out my bottom 3 stocks as being, one right now is it's funny to say, is actually Lyft. Opposite of what Devin has, I did invest in Lyft. I do greatly believe in it as far as a ride sharing company, but I'd like to call it out as one of my bottom stocks. And that's mainly because, you know, a lot of people are scared during this pandemic. People are scared to get in cars with different people. They don't know their protocols, the cleanliness of the vehicles. I, for one, I'm scared to get into Uber, get into Lyft, anything ride sharing. It's just, you know, the nature of the pandemic. You know, no one knows where that car's been, who's been in that car. You know, there's no backwards tracing. So for me, again, you know, Lyft was one of my bottom stock performers. Another one I'd like to call out is AMC. You know, there was this whole Reddit, I would say, expansion of the stock where it just inflated the price and people are hopping on it. Same thing with GameStop. So I fell into the trap. I like to call those bottom performers because, one, you know, people manipulated the market, and due to manipulation, a lot of people lost money. Robinhood blocked the trading and the selling of the stock, which people couldn't, you know, rebound hard enough to make the losses. So those stocks are definitely good call outs for my bottom 3.
Yeah, thanks, Robert. I definitely agree with the whole Uber, Lyft, ride sharing aspect of things. There's so much uncertainty about the cleanliness processes. And so it does kind of shift to this like environment of just being like nervous and using the apps and stuff. And so definitely agree with you on that space. Anyone else have any other thoughts on their bottom performing stocks?
Yeah, I can jump in here. So my actually worst performing stock is Costco. I've actually lost right around 10% of my return on Costco compared to my other stocks. The way I invest though, and why I'm not really worried about it, is I'm long on all my stocks. I don't like to trade stocks because I feel like that's gambling and there's too high of a chance to, you know, lose money on that. So when I invest in a company, I kind of pick a company, one that I use. I don't like to invest in companies that I'm not understanding their product. And because I go to Costco a lot, and I know a lot of other people do, and they provide, you know, food, toilet paper, cleaning supplies, everything. I feel comfortable that over time it's going to go up. So even though it's not performing well, I'm okay with that. And the way I invest is dollar cost average. For those that don't know what that means, is I take a certain amount of money every single month and I put that into my stocks, no matter if it's high or low. And that's really because I'm long on the stock. I'm not worried about the day-to-day fluctuations. If it's lower one month, great, I get more stock out of it. If it's higher one month, even better, right? My money is performing better. But I think it's going to rebound, you know. It's Costco. Everybody knows Costco. Everybody has a Costco credit card. So even a down quarter like they're having right now, I'm really not too concerned with it. And honestly, my next move is to just keep buying more stock of theirs. That's what I do. I pick about 5 stocks that I invest heavily in, and I just let it ride.
I have a very similar model to, this is Devin again. I have a very similar model to James as well. I'm very long on my stocks. And every month I've tried to put at least $100 in, if not more, and playing that long game. I think to Robert's point about AMC and GameStop, I would say it's never really a good idea to invest in a stock once it has a lot of like craze around it, because at that time it's probably too late. I would, definitely recommend, just for me personally, like if you've already invested in such of a stock and then it, has that craze, then that would be the best time to sell, because it's likely going to drop, as we did see with GameStop and AMC. And specifically on AMC, I would, Robert, to your point, I would play the long game on that. This was a stock that was dropped down to like $1 right as the pandemic started. And rightfully so. I mean, no one could really go to the movie theater. But again, once this pandemic is over, we will likely see that stock rebound. Though, there you do see companies like HBO Max and things of that nature who are now putting the movies that are coming out in theaters on that platform. And after the pandemic, if that continues, then there might not be a reason for people to go to the movie theater when they can just pay for HBO Max and watch it in their home and make their own popcorn. But I do believe that couples specifically, and then young teenagers are still going to want to have that movie theater experience, just because it gets you out of the house, and for teens it gets them away from their parents and gives them a bit of privacy and time together. So I would keep that in mind when thinking about specifically about AMC.
Yeah, for sure. I would have to agree with that. Like, I bought the stock with the intent of holding it. I get a lot of people telling me you should sell, but I have faith that it's going to go back up. And the last week, GameStop itself, it went up $100 more, but it's still not to where it was, a few weeks ago. Imagine paying $450 a share and it drops down to like $30-$40. That's a huge loss. But AMC, I agree, with all the restrictions lifting up, it's a long-term hold, especially during the pandemic. The Bay Area specifically, we went from a purple tier to a red tier, and even social distancing and being outdoors more specifically, you don't really need to wear a mask, just be 6 feet apart. So lifting those restrictions, I definitely believe the stock market will gain its pace again.
Yeah. I personally actually, I'm the opposite. I have no long positions. I've been doing only option trading for the past like year now.
Oh man, that's dangerous sometimes.
Can you speak to that? Because I've not done it at all, and I'm quite nervous. I don't know,
Yeah, so option trading is I mean, in my opinion, it's for the big hedge funds and it's for like heavy investors. It's one of those models, like you can't make money unless you have money, which really sucks. There are people that you can put in like $100, $800, depending on the option price, and make like thousands of dollars, right? Like you've heard stories of that. But how options pretty much work is like there's a call option, there's a put option. A call option is you're betting that the stock's going to go up in between that time frame that you buy it at. So like you can buy it a week out, a couple days out, and you're betting that the stock's going to go up. And a put option is the opposite. You're betting that the stock's going to go down.
Yep.
And there's a lot of factors in these options that are called Greeks. Like there's internal built-in volatility. There's like the time frame Greek. There's like beta. There's a lot of these indicators that change the value of your option. So for example, I was betting on options for GameStop because it was going crazy.
Yeah.
So it was just like, it was pretty much like at the point where it was like $30-$40. You can either bet that it's going to go up to like $50 or it's going to go down to like $20. So what I did was I just hedged my position, where you buy an option that's going to go up, and then you buy some of the stock also. So you buy actual stock which is like your safety net. If it goes up by like 10%, sure, your call option makes some money and you make some money on the stock. But if it goes down, what happens if it goes the opposite way of what you bet is you lose pretty much like all your money, right, in that time frame. And there's like long positions and there's short positions. So if you buy a short position, you're buying it like 2 weeks out, saying that from 2 weeks from today, you bet that the stock's going to go up from 40 to 50. And if it does that, the percentage that it goes up, so say it goes 40 to 50, that's like a 20% gain. Your option will double that usually. But in terms of GameStop, there was so much volatility that the chance of it going down was as high as of it going up. So your volatility rating indicator is so high that if it goes up 20%, you actually make like 500%. So people that put in like
Crazy.
someone put in like $800 it was at like $20, and then it went up to $100 and he made $16,000 on that $800. And because of that internal volatility rating, options can either increase or decrease in value. But on the other hand, people bought options at $350 that is going to keep going up because GameStop was a short squeeze. Like there were so many put options bought from hedge funds on this stock that all it takes is like a small amount of people to buy call options and then exercise those options, which means when you buy a call option, you're saying that I'm going to buy this stock at this price. And if it hits that price, you can exercise that option and you get shares for the amount of the value of your call option. So everyone did that. And it forced the hedge funds to release all their shares and they had to sell all their short positions. So instead of having any short positions or put options, there's no put options and there's an infinite number of call options. So the stock price has infinite value. So people that bought at $350 expected it to go to like $1,000, but instead it went down. So those options went to zero.
They lost their money.
And they lost all their money.
Crazy.
So yeah, so I've been doing that just for because I believe in the next like couple months that our market's going to take a huge hit because our inflation rate, which people are not really talking about, has increased a lot due to printing of money and all these stimulus bills. And another one is planning to come out, which will increase our inflation and decrease the value of our USD, which is good in the short term. You make a lot of money on the stock market, but that's the only place you make money because our unemployment is really high. Companies are not performing well. And when this craze and when the printing of money and the Fed stops injecting money into the treasury bill stops, then we have to realize what our USD is valued at and everything will come tumbling down. So that's why I'm only playing short positions instead of buying for the long.
I'm opposite on, I don't think there's going to be a crash in the market. I think that there's too much government intervention and I don't think the government's going to let that happen. A la, or the different CARES packages and the stimulus checks. So I understand why you think that, Paul, but I'm the opposite. I think that it's gonna just continue going up, and because the government is not gonna let it happen.
I really hope so. I really hope so.
Yeah, right. We all hope so. Paul, I think you brought up some really great points, and just two follow-up questions on that, I guess, before we move to any other questions. Could you, so whenever you're making this call option or a put option, are you saying that, do you have to say that it's going to go up or down a certain percentage? Or you do?
So for example, say I have a stock at $10 and 2 weeks from now, I think the stock's going to hit $20. So I buy, the call options are set at certain price points and you have break even prices. So say I want to buy a $20 call option, which says that I'm going to buy this stock at $20. But with all these Greeks and these indicators which control the value of this option, your break even price, which is where your money will it will not double, but you can sell at 20, you can buy at $20, you can exercise your call option at $20. that the price of the stock has to be a certain percentage higher than that for your money to break even.
Gotcha.
So you can't, once you buy the option and say, I'm going to buy it for $20, you're locked into that. You can't, if it goes down, it's just going to lose value. So you can't really change your option unless you buy another one, if that makes sense.
No, that makes sense. Thanks for providing that clarity. And then I guess then my follow-up question to that is, if you're playing that short game, as you mentioned, and saying like, okay, I know in 2 weeks, or I believe in 2 weeks, it's going to go up, it's going to go down.
Yeah.
What information are you leveraging to make that decision?
Yeah.
Because I think in the long game, obviously, like we can say in the long term, the pandemic is going to be over. Stocks are likely going to go up. That's a pretty common notion amongst a bunch of people. But how do you determine within 2 weeks if a stock is going to go up or down?
Yeah. So in a traditional market, which I don't think we're in anymore, you look at like the financials of a company, you look at their quarterly earnings, you look at their PE ratio, you look at their future products, and like, well, everything that the company is trying to do is what indicates how a stock price is going to move usually. So like if the PE is higher, the price to earnings ratio is higher, that means investors are willing to pay more for the stock than it's actually valued at, right? So if you look at like Tesla, their PE ratio is like 300, which is insane.
Wow.
They're actually only valued at like, I think it's $300 or $200 or something, if you just based off their financials. But currently in the market, there's just so many retail investors that have come in to the market due to like they're staying at home, COVID, and Robinhood has allowed them to invest. That it's more of an emotional market and more of like, oh, I believe that this stock is going to go up. I believe that this is going to happen. So it's more of just like seeing where the hype is at. And if people are talking about, like, for example, GameStop, AMC, all those the Reddit stocks, those stocks had absolutely no reason for them to go up other than the fact that people believed in them, right? And I currently work at Square, and did I cut out?
No, you're good. We can hear you.
I'm good. Okay, yeah. So I currently work at Square, and I know that our stock is not worth where it's at for sure. I'm in accounting. And I know the financials. I know what we're valued at, and for like everyone believes because of the Bitcoin hype, because of the Square provides all these contactless transactions, because of all this stuff, people believe that Square is going to be the next thing. And so do I, but purely based on the financials and how the stock market traditionally works, we should not be valued at $250 a share, which is making us like $20 billion or $30 billion, which is just not, it's not feasible and it's not sustainable. And everyone now, with the purchase of Bitcoin, everyone thinks that Bitcoin is running our company. And that's what people believe Tesla is happening to Tesla as well, because they bought $1.5 billion in Bitcoin recently. So if Bitcoin drops, then that stock is going to drop too, because people are like, oh, this company is dying, Bitcoin's dying, like they have no other use. But that's not the case. So because of the way that people are trading, I'm just investing like that too, like just based on hype and how people are thinking. And that's a reason for me to believe that the market's going to take a hit, because people are going to get more emotional when things do take a slight dip, so that's,
I would have to agree there, because I mean, once for me, the past couple months, it's watching the stock trend every day, right? When I see a huge dip, it puts you in a mode where you want to sort of release the stock, you hold on to it, you buy more, but then you follow the trends. And in relation to cryptocurrency, right? I feel like cryptocurrency is, in parallel to how the stock market's working. Bitcoin is a good example, right? It started just a few months ago. It was about $30,000. Well over a week ago, it went up to 58,000, and that was with news with Tesla investing at 1.5 billion. So it's crazy how, one, companies can manipulate the market, and two, the hype is real. People buy into it. So with cryptocurrency, can we sort of say, is it something we should invest in, should we buy into it? Should we sell it if we have it? What are you guys?
Oh, so my thoughts on crypto, and I took a big dive into crypto during the last summer and everything. I'm very bullish on it, but my personal belief is that you should only invest what you're comfortable losing, right? So for me personally, I only have about 10% of my assets in crypto, because right, there's the chance that it could either go to the moon, so to speak, or drop down to zero. It's going to do one of the two, right? It's not going to just kind of float around. So and it's so volatile. Verpal was talking about the volatility of stocks. It's 60,000 one day, and then it could drop to 10,000 the next day. Who knows? But I believe just a little bit of your assets into cryptocurrency. And you have to really be prepared to lose it all, so I would not tell people to put 50% of their portfolio in crypto, 100%. I just think that's absolutely insane, because the government could come out and deregulate or say it's illegal, whatever it is, and say it's not worth anything. It's not going to happen, but they could do that. But I believe everybody should get in on Bitcoin. Even $10 is more than the majority of people in the world have. But just be prepared to lose it all. That's my advice.
I might have to do it. I haven't pulled the trigger yet. What about have you been following, I think was it dogecoin or something?
Dogecoin.
Dogecoin.
What is it called?
Dogecoin.
Dogecoin. Yeah. What are your thoughts on that?
It's just a meme stock. It's like Robinhood, it's just a meme stock. There's really no, I think, value to it. Like the blockchain, I don't think is solid, like in the Ether or Bitcoin. It's funny, haha, good laughs, but it's not going to be anything.
Okay, that's good.
To add to that, James, there was some controversial talks with Elon Musk tweeting about Dogecoin. When he did that, he manipulated the market too. That stock rose to 180%. People were buying like crazy.
What did he say? For context,
he just put some emojis with rocket signs, the to the moon type of thing. And people are all retweeting it and definitely getting involved with that stuff or crypto. So crazy.
Yeah, it's interesting what's going to happen and how they're going to regulate people having so much profound effect on the market, like Elon Musk. I don't know if you all watch that Dave Portnoy of Barstool Sports. He does like a day trader global thing where every morning he's like live streaming himself investing in stocks, and he's just saying, I'm going here, and then everybody buys it and it goes up. So it's going to just be interesting going forward in the future with, like you are talking about Robinhood and how much it's manipulating the market. It is. And, if there's going to be legislation to, kind of curb that and make it more of a free market, or, if it's going to be allowed to continue for Elon Musk to be a troll and tweet out memes and then, pick a stock he wants, like, I don't know, like whatever, and then just invest heavily in that. What do you guys think?
I've been investing in Bitcoin for like 4 years now. Oh, nice. Or like this crypto in general. I've been following it for like 4 years, since like the last pump too. So I right now currently crypto is just like a cyclical market. Every 3-4 years there's this thing called the halvening. I don't know if you guys have heard of that. Yeah. So how Bitcoin works is that you mine it, and then the miners get a portion of Bitcoin, which is like created out of this algorithm, which people, like when you transfer Bitcoin to someone else, it's like there's a triple step transaction and verification, and through those verifications people generate Bitcoin. That's why mining has become so popular, people buying graphics cards and all this other stuff. So that production of Bitcoin gets cut in half every 4 years, and that creates a scarcity in the market, and there's only a limited amount of Bitcoin that can ever be generated, which is 21 million. So right now we're at like 18 or 19, something close to that. So as we get closer to that 21 million, and as every 4 years when they cut the production in half, the supply and demand, the demand goes up and the supply keeps getting more and more scarce as people hold more and more Bitcoin. So and with that, the government comes out every 4 years after the pump And Janet Yellen, she comes out and she says, oh, I'm just gonna here, I don't like Bitcoin or something else, and they just put some more regulation, more scare on it to crash the market. And when Biden became president, he said he's going to hold off on his regulation for 60 days. So that was like January 20th. So in that 60 days, which is coming up, the Bitcoin, the prices have skyrocketed and people have been manipulating it and whatever, but anyone can manipulate Bitcoin because there is no regulation behind it. So there's a thing called whales, where a large bag holder of Bitcoin can just buy or sell tons of Bitcoin. And then it just pumps or dumps the market for crypto. So that's been happening for the past like month or two. But in like March, I think end of March, maybe April, we're going to see some regulation come out. We're going to see a dip in Bitcoin, and then we're going to see another like stasis of 3 to 4 years, like we did the past 3 years. And then we're going to see another pump when the halving happens again. This is just for Bitcoin. But I think in Ethereum, which is Ether, has been trailing Bitcoin's price also. Yep. But I think with when they created ETH2, which is trying to turn Ethereum into Bitcoin, that's going to trail off a little bit. They're not going to follow each other, because what Ethereum 2 does is, well, previously it had unlimited supply where you can just create unlimited of this coin, and people can make like apps, or people can make like other coins on this network. But ETH2 is limiting the supply of Ethereum, where you take a certain amount and you stake it, and you get dividends. So it turns into like a stock kind of. So you put your ETH into the network, and people can use that for whatever, creating whatever, but you get a percentage every year. It's like 8% a year you get in Ethereum back. So after that, they're going to take away mining, and it just generates through the dividends. But part of that dividend gets like, people get like a fee or transaction fee, right? Firms get a fee if you put into like E-Trade, they get a fee, or Fidelity. So this network is going to take a quote unquote fee and delete a part of the coin. So it's going to create a limited supply in the long run, which is going to increase the price exponentially, or it's just going to have like an infinite price like Bitcoin is going to have. So my point is, I feel that in the next couple of months might be the time to invest before all these actual use cases come out for crypto, because currently there is no use case for crypto other than storage of value. So I don't know. I don't think that it's going to hit 100K, 200K this year. I think we've capped out at 58K. Once regulation comes in, it's gonna take a really big hit, and then it's gonna hold a stasis. But that's just my thinking.
And for beginners such as myself, like how do I get into it? Is it like an app like E-Trade?
I'll just get on Robinhood. I would just go on Robinhood. Before, you'd want to go on like Coinbase or Gemini or all these other exchanges, because Robinhood, when you buy into it, you don't actually get the coin. It's just like you're investing in a share, like Cash App, you can invest in a share of the stock. But Robinhood is changing that, where you can now take the coin out of the exchange. So now it's yours, and they prepare all the tax documents for you. So it makes it really easy when it comes down to it at the end of the year. So I'll just go with Robinhood, even though they have a bad rep right now, but I still think it's the easiest way to get into it.
I have a question regarding the Coinbase network. Is there any disadvantages to using Coinbase? As a Coinbase user, I've heard that there was some implications of even withdrawing your money once you sell crypto.
Yeah, Coinbase is very they manipulate the market a lot, because they put holds like Robinhood did, but they just they're like, oh, we have some issues, maintenance issues, and when when Bitcoin starts to skyrocket or go down, they just block all trades for like an hour or two to try and stabilize the price. So they manipulate the market a lot. So that's why I got out of Coinbase and went to Gemini, which is started by the Winklevoss twins. I don't know if you know about the Facebook story, but yeah, they started Gemini. So I went to them because they don't do that type of stuff.
Yeah, I use Gemini too.
Yeah. But Robinhood does all the tax documents for you, which the other exchanges don't do. So Robinhood's pretty easy like that.
Well, I guess to wrap things up, I just wanted to kind of ask everyone's last and final thoughts or advice for any new retail investors that you guys have.
Well, according to Verpal, we should short the Square stock.
I don't know. I can't say anything, but take all implications aside.
No, my final thoughts would be just try to do your research and invest. You could make some money. I think to James's point, do not invest money that you cannot lose. My grandfather taught me that same thing, and I still live by that today. But if you want extra income, and besides your 9 to 5 or your business or anything that you're doing, it's an easy way to learn a lot and to make some money. So I definitely think that investing is worth it. It took me a while to actually first get into it, and I still haven't got into crypto yet, but based off of this conversation and others I have, it's something that I am monitoring very closely. But yeah, try to invest. You can really there are opportunities to really make a lot of money.
Yeah.
Yeah.
All right, well, if no one else has any other thoughts, I guess we'll just wrap it up. Thanks everyone for joining us. And again, our group is 3rdTimesACharm, and thank you for your time. And thanks everyone for your thoughts.
All right,
Yep,
thanks
thank you.
everyone.
Thank you.
Bye.
Bye-bye.